Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today is a little bit of a heavy-hearted day. We've been seeing our friends on social media who are Ukrainian come out with just incredible photos and videos and stories of what's happening to their families because of this Russian invasion of Ukraine. And it almost feels like the way that Putin presented it, that he wants to have like a genocide of the Ukrainian people. And I don't mean that in light terms, I mean it in a cultural sense. I think he wants to erase what the Ukrainian people have become and replace it with his, you know, 50-year-old view of what Soviets should be like. And he wants to inject Russian Soviet culture into Ukraine. And it's such a sad story because the Ukrainian people have, 1,000 years of history and culture that's theirs, and they have a right to express that. And what we've been seeing on the charts for the last, couple weeks has been that uncertainty about war. It's been the uncertainty of war. All of this red when we thought Bitcoin was finally getting bullish again, right? After this downturn from $69,000, the Fed started talking about increasing interest rates. The world started talking about inflation. The writing was on the wall that many of these stocks were just way overheated, fueled by just printed money, basically just free loans with very little interest. And so they could just do whatever they wanted with it. And what do they do? They put it into risky assets, right? They put it into risky assets like Bitcoin, just pumped the price of everything up in the market, pumped the price of all these risky assets, just pumped it to the moon, right? From all the way back here in the Corona dump. All of this is just free money, stimulus checks, loans to companies that just wanted to put Bitcoin on their balance sheets. And of course, when the writing was on the wall that it was time to increase rates, that the free money wouldn't be there anymore, of course, they started selling. And they started selling, and they started selling, and they started selling and selling and selling. And there might be a huge market correction, right? Because there's been many market corrections. You get them all the time, and they're pretty big. There might be another big one coming up, right? The whole world got inflated with, stimulus money. And now it's time to pay the piper. But the question is, how far will we dip? And why did we pump yesterday? Right? What changed yesterday? Because a lot of people were shorting. A lot of people were shorting the market thinking that war was just going to wreck all of their portfolios, that stocks were going to be in chaos. There was no way that we could recover from that World War III was going to break out. But what happened was this incredible rally. And I called it. I called it right here. I did it on you know, in a friend's Discord. I called, let's go long here. And then we pumped all the way up here, and I said, no, it's time to go short. How did I know that? I've been watching the fractals in the market. I've been doing the TA. I've been following the news, right? I know that when there is an invasion, the invasion doesn't cause a pump. What it does is it negates part of the uncertainty that's in the market. So right here we had a cone of uncertainty, right? We had a cone of uncertainty where Let me just get some trend lines out here. Where this basically wedge, this channel, had been developed out of the uncertainty of war. This downturn was caused by interest rates. Okay, the writing's on the wall. The writing was on the wall that interest rates were going to be rising, that they were going to be rising a lot, and the stocks might take a hit because of that. And that it was time for them to take a hit. They had been rising like crazy for the past year or so. But we did a healthy retracement. We did a healthy correction. And there was a possibility that we could make another bull run. You know, there might be diminishing returns. It might only get to 50,000 and then, you know, be kind of a relief rally. But something intervened, right? We came here, we filled the CME gap, made a higher low, was about to turn around, and then suddenly the war news came out. And it was dead serious, and we just fell, tried to recover, fell, tried to recover, boom, massive invasion, just fell to hell, right? But here's the thing. These wars, you know, the impact of these wars gets built into the uncertainty before the war. We live in an age where there's 24-hour news, right? 24/7. So really, everyone can calculate for themselves what they think the cost of this is going to be, and they can see from past wars that, you know, we make it through it. We made it through 9/11, right? We made it through all of the, you know, the world wars, the Great Depression, all of the stuff. We made it through it. And you can quantify that. There's a lot of data that goes to it. And so, you know, the markets took a big hit. They took a big hit. Bitcoin took a big hit. Your altcoins got they just got terrorized. They got smashed down maybe, you know, 70, 90%. Your altcoins just got obliterated, right? And then there's this bounce, this bullish bounce, and we may even be looking at a potential breakout. I'm not sure. This looks a little bit like a BART pattern. It might come back down. There's a lot of resistance up here. Could be a bull flag. It's, you know, just doing a retest right now. But there's this channel. Not sure how it's going to work out. Depends on the rest of the market. These days, Bitcoin is traded basically like a meme stock, right? It's controlled by a bunch of billionaires. Only around 5% of the people who own Bitcoin, you know, own less than one Bitcoin. So what does that mean? That means regular people. Regular people own less than one Bitcoin. They don't, you know, think about the amount of poverty that's in the world. Think about the income levels that are in the world, right? They're not all first world, you know, upper middle class, you know, just, you know, they're not multimillionaires and billionaires. They're not hoarding Bitcoin. They have less than one Bitcoin. They have a fraction of a Bitcoin. It's only 5% of owners of Bitcoin have a fraction of a Bitcoin. So that means 95% of Bitcoin is owned by these guys who have a ton of Bitcoin, just a ton of Bitcoin. And so it's very unevenly distributed. At least 30% of Bitcoin is controlled by really, really powerful whales. Okay? Those jumbo whales, those I forget what they call them, like blue whales or something like that. Anyway, the humpback whales, right? So they can crash this market and they can pump the market whenever they want. That's a 30% of the stock. I mean, they can do whatever they want. If you know, if a certain class of people owned 30% of one stock, they can coordinate. They can talk to each other. They can understand what each other's doing. They use the same brokers. They use the same bots. They use the same VIP channels to trade. And they can manipulate it as much as they want and get as much of it out as much out of it as they want and leave you holding the bag whenever they want, right? So, it's hard to say exactly what's going on here because this is the same type of game that's in the stock market. It's the same type of game that's played with the S&P, with the Nasdaq. These big players now own Bitcoin. It's not the little guy. It's the big players, and they fix the game in their favor, right? Let's take a look at the S&P. Just zoom out. Look at this chart. Look at this chart. No decency at all. What you're witnessing here is, I mean, it's basically theft. You know, I say, what do you mean it's theft? That's investment. It's not theft. I don't know. It's theft because this is driven by inflation. These guys, these powerful guys, they write the rules. They write the rules. They inform the Federal Reserve. They pay the politicians. And so for them, it's up only, right? It's up only since way back here, since the early 2000s. Just it's up only. How does this happen? Well, it's because of low interest rates, policies, the Fed policy to have low interest rates and to use the tools that are in their basket in order to benefit the investor class, which tends to be the billionaires. Let's face it, tends to be the multimillionaires. You know, well-to-do middle-class Americans, maybe they maybe they own a company, right? A small business, something like that. They don't have generational wealth that's being passed down in the form of stocks and things like that. These guys do. These guys do. And so they pay the politicians, they write the laws, they get the Federal Reserve to do what they want, and it's just up only. And the way that that comes about is through inflation, because these billionaires you know, who are basically influencing the political environment to go up only in the stock market are the same guys who are influencing the market to inflate. Because while they get free loans to buy risky assets like Bitcoin and like different stocks, the regular, middle class and lower class, their interest rates just, you know, they can't even get loans. So it doesn't matter if interest rates are low or high. They can't get loans. They don't they don't have the capital in order to invest. And I'm not trying to make this into a class thing. I'm just saying it's it's time. It's time for a correction in this market, right? And the writing was on the wall. Look how far away this is, on the weekly from the 200 EMA. It touched it here in 2015, almost touched it in 2019, touched it during the corona. This is this is more like before this policy of just printing unlimited amount of money. Printing unlimited amounts of money over here. This is more corrections, right? Before that. Same thing over here. You have these natural correction waves, and then somehow you get up only. That's what I'm saying. It's a theft. It's a theft. This investor class got their money on the backs of the people who are suffering from inflation. And that's just a fact. It's just a fact. And so inflation got to be a point where regular people are pushing back. They're saying we can't take any more inflation. We can't do this anymore. We can't bear the load of the investor class on our backs. You have to increase rates on these guys. If they're going to take out loans to be speculating in the market, if they're going to be taking out loans to pay for their stocks, which you remember the stimulus to business? A lot of those companies took the stimulus checks. They basically took your tax money and then they bought back their own stocks, right? Which was incredible. They got their stocks at a discount using your money, and then they made more money from their stocks, which they had previously sold and you lost money on using your taxpayer money. You know, how amazing is it to be part of that system? That's just it's legalized theft is what it is. And so now we're at this point where we have to increase interest rates because inflation is just going crazy. And people are wondering, how can we pump? Well, we're pumping because we have a system for the last couple decades that's been focused on keeping this money machine going for certain people, not for everyone, for certain people. And you can see that even in Bitcoin's chart, right? It's been pretty much up only. And at some point, you need to come back. At some point, you need to come back and touch these 200 EMAs, 200 MA moving averages. Just come back to earth. Get realistic pricing. We did it here. We did it here. Are we going to do it again? Well, if the interest rates have anything to do with it, we will, right? So what caused Bitcoin to pump? Where am I going with this? It wasn't the invasion. The invasion just negated some, like look, less than half, just some of the uncertainty surrounding the possibility of war. It negated just part of it. It basically just recovered the invasion. It didn't. We didn't skyrocket or anything. The reason why we can pump is because of government policies and how they react to war. And what the U.S. government did is they said some of the members of the Federal Reserve came out and they said, well, most likely we're not going to be as tough as we thought because of this war situation. We're gonna probably be less tough than what you thought when you built in all of this downturn in the market. Like we were just kidding. We're just kidding. Sorry if you lost anything, but we were just kidding. We're going to be a little bit easier than what you thought. And of course, they haven't formally said it yet, so we don't know exactly what's in store for us. But the market built in all of this pullback, including a little extra when we finally found some footing, and then we got a little bit extra because of the Ukraine situation. And the Fed said, you know what, we don't want to crash the stocks too much further. We're the stock class. We have decades of serving stockholders. And you know what? Inflation isn't so bad. Inflation isn't so bad if it's going to cause the stock market to collapse. So we're going to just keep inflation a little bit longer. We're just going to push that down the road just a little bit longer. And so they didn't make a decision here. 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 They kept pushing it back and pushing it back and pushing it back. The increases in interest rates. They kept pushing it back. And now we're hearing again that they're going to not be as tough as we thought that they were going to be. Here they were saying like, oh, we might do double interest rates, right? We might do 50 basis points instead of 25 basis points. The market was, brother, we're gonna have another dip. And we said, okay, well, this is the price if we have, this is the price, this discount is the price if we have just like regular interest rate increases, but at a pretty fast pace. And then this extra is if we have like double interest rates up front. And then, okay, like maybe it's time to start buying again. At least we can get a relief rally, see how the year goes, right? Then the war came around, and now we're dipping again, threatening to break these levels. And the Fed members are starting to come out and saying, "No, no, we were just kidding. We're not going to do a double rate. Like, don't expect double." And so they better not do double interest rates because if they do 50 basis points after this, then we're going to lose that bounce. This bounce is not because the war. This bounce is not because the invasion. This bounce is because the Fed gave us some good news. And it's still a little bit uncertain. We still have to wait until into March until we have the clear answers. I think it's March 11th, maybe March 20th. Anyway, it's sometime in March. They just keep pushing these things back. And of course, if they act too aggressively, they can put us into a recession. If they act not aggressively enough, then inflation, along with all the inflation from war, because war has a cost on the economy, right? That's what this dip is about. This is going to cause you know, this war is going to cause the cost of goods to go up. Oil will go up. Commodities like wheat will go up. Natural gas will go up. Certain metals like gold, certain metals used in technology equipment that comes from Europe. Pardon me, that comes from Russia and that Europe is dependent on. These things are going to go up in price. And, you know, the sanctions, the sanctions weren't as tough as actually we thought they might be. And that's because Europe can't really get 100% on board with the US. The U.S. wants to cut off Russia from the SWIFT program, which is a really important banking system. It wants to do a bunch of things, but Germany and the UK and a bunch of other countries in Europe, they're really dependent on a lot of Russian business, right? So it's not easy for them to lose $200 billion of econo- eco- economic exchange, right? It's a tough pill to swallow. Especially in a year where you're having all of these pullbacks because everything was overheated from the free money from Corona days, right? Corona, everyone printed free money, everything got overheated. What goes up must come down, right? It has to touch base, and then it can go fly again. Eventually, you pay the piper, and it's time to pay the piper. Just, you can't go to the moon. Nothing can go to the moon. If it goes to the moon, it's a scam. It will crash down hard. All those meme coins that go to the moon, what happens after they go to the moon? They crash back down to Earth, right? Most of them never recover. Same thing with stocks. They have to touch base, and it should be gentle. It should be gentle. They can't just like go up forever. They can't go up only. That's just a ridiculous concept. They have to come back. They have to touch their EMAs, right? You go below the EMAs, you go above the EMAs. You go below the EMAs, you go above the EMAs. That's how you have moving averages. It's an average. It's up and down. It's an average, right? So if you're above it all of the time, that means that something's wrong. That means that somebody's doing something funny, right? If you're always above your moving average for years, it's not that you're super healthy. It's that it's legalized theft is what it is, right? It's not, oh, the stock market is super healthy. No, it's mom and pop, mom and pop stores that are paying their taxes. They're paying for this, right? Joe Worker is paying for this. We're all paying for this by way of inflation. Nothing goes up only. It has to come back down. And so this was the moment. We started to turn around. What was this? Yeah, January, right? January, right here. We started to top out. Made lower high, right? Here's the highest high up until that point, and then we made a lower high. Gave it a good shot. Failed. Came down. And we could keep coming down. We have a long way to go down. There's You don't have to stop here. So the Fed has to decide how far they want to cool down the economy so that they can get inflation under control, and how much free money should be out there so that the stock market doesn't just collapse. And it's a tough balance. It's not an easy decision. Either way, people will be hurt, and it's kind of like being stuck between a rock and a hard place. And you got a lot of powerful people on this side, but then you have a lot of angry people on the other side, right? Who are battling inflation, see the cost of bread rising, that kind of thing. And so this bounce, look at this bounce. It's pathetic, right? I mean, it looks pretty cool. It's a huge engulfing candle, but compared to the size of the problem here, compared to this dip, it's just uh, it's just a bit of hope right now. It's just a bit of hope that maybe we can catch a few levels. Maybe look, we reclaimed one level here that I have marked off. Maybe we can reclaim the next. And then the S&P, maybe it can keep going for a little while longer until a much bigger crash happens because the Fed is kicking the can down the road. And so that's why we pumped. It wasn't because of the war. It's because of policies that are made as a reaction to war. And war isn't good for war isn't good for stocks. It's not good for Bitcoin. Of course, certain stocks can benefit. Certain stocks can benefit. We talked about how oil and natural gas, these things are going to go up in prices, right? Wheat, these type of commodities that are grown in Russia, they're going to go up in price. You know, who were the losers during this pump? Who were the losers during this pump? Well, energy, certain types of materials, the financial sector actually, right? But tech, communications, real estate, you know, they had some nice pumps. Let's see how gold's doing. Look at this pump. Gold had a nice pump. And look, again, this was the build-up. This was the conversation about the potential for the Russian invasion, right? We had a lot of advance notice. We had advance notice that there was the possibility of an invasion. We had advance notice on the potential for rate increases, right? So a lot of this stuff has been worked on. And what did we see? We saw gold pump 4%. It's That's incredible for gold because look, this is 2012, 10 years ago. And this is our price right now, this blue line. And it's the exact same price 10 years ago. And even around that time, it could only, this, let's just say we were on this shelf. This is a little shelf here. That's 10% to this line. It grew 10% from a year ago. And it was actually above that price before that. So it hasn't really done anything. So why did this retrace so much? We say, oh, the market's pumped, the market's pumped. Well, actually, people took profit on certain things and then they jumped into other things that were undervalued because we crashed so hard. We crashed so hard on that invasion, on the invasion news. Look at this, just crashed. We crashed so hard on that invasion news that, of course, there was a lot of opportunity to like get out of certain stocks, get into certain stocks, and make a lot of profit. Oh, look, we're pumping right to my lines there. So what happened is that during all of this uncertainty, people got out of certain things like Bitcoin. They got out of certain risky assets like tech, and they got into certain things like gold and commodities and oil. And then once the invasion happened, they could have just sat in those positions, okay? They could have just sat in their new positions and just waited it out. But the Fed came in and they said, you know what? We're not going to be as tough as we told you we were going to be. And so suddenly there was a little bit extra money in the market. And so now you're seeing this bullishness. And look at that. Look at that. So I was calling this yesterday. I was calling this last night that this was going to happen because of the Fed policy. It's not because of the invasion. It's not because of war. War has a cost on the economy. All of this cost hasn't been recovered yet. We haven't recovered that cost yet. And you know what? We would have been bullishly on our way. We would have been bullishly on our way already. And there definitely was a fractal that was playing out. I mean, it was basically a W-shaped uh, it was basically a W-shaped recovery that we were having. But even on a bigger scale, like you could see what was happening. We could have at least gotten a relief rally or something, but we got a lot of suppression from the rumors of the war. Whereas we had this fractal that played out almost identically. Right? You look at this. Very similar. Very similar. And then we had this kind of like lightning bolt up, and then retracement. And here we had a higher high, but here we had Russian news. And so we had a lower high. And so of course people started to short the market. And they kept shorting on the uncertainty of war until the Fed stepped in and said, we're not going to be as aggressive as we said we were going to be. And so now we're pumping again. And that's how I knew that, to long while catching support. And I also knew that there would be a profit taking level at the resistance. There'd be a profit taking level at the resistance because a lot of these guys are going to have to switch their positions. And also, we need to wait for some final news. We didn't know exactly what the sanctions would look like. And we can pump more because the sanctions aren't as harsh as what a lot of people thought. Which isn't to say that they aren't harsh. It's just that they're trying to protect things like oil. They're trying to protect certain things in the economy so that you and I don't suffer that much because of the war. The Ukrainian people are suffering tremendously. And so they're trying to figure out how to reduce that suffering for people outside of Ukraine who are already hurting from this economy, right? If we look at this, we may even have another inverted head and shoulders right here, right? I've already got it marked off actually. See, we're going to recover this. We're going to recover this war uncertainty. Certainty is back in the market, and the Fed is saying that they're not going to be as harsh as that. We were already recovering. I mean, at least having a relief rally. It doesn't mean we're going to fully recover. No one's saying 100K Bitcoin. Just saying we were going to have a relief rally. It was time for a relief rally. And then we got suppressed. And so we have a chance to have a continuation of that relief rally. No guarantee where we're going to end up. But perhaps we can continue to have that relief rally as opposed to just falling to hell, right? As long as there's not going to be World War III, as long as the sanctions aren't the most severe that would even punish, us regular people outside of, Russia, outside of Ukraine, where hopefully the damage is minimized. And as long as the Fed is still offering reasonable rates so that these institutions that buy Bitcoin and other stocks, especially the tech stocks, so they have a chance to buy low, and then we can pump and they'll sell high, right? They'll take their profit somewhere. We have a lot of resistance in this area. It's not necessarily guaranteed that we're going to break through, but you can see a little bit of a formation here. Which tool do I use for that? The polyline. Right. See that inverted head and shoulders. And the measured move. If we're able to break this area. And if we aren't, then we're gonna break back down. Look, that would bring us right back to trend. That would bring us right back to trend. So that adds to confluence that this is probably a valid inverted head and shoulders, and just depends on the market. We saw this huge increase in volume, right, during the dump and the pump, but then volume fell off. Looks like we may be getting a little bit of volume back, right? This little spike here. That's nothing compared to this. Let's see how it goes. See if there's any energy left in this market, if people are still interested at these prices. We can look at some stocks. We can look at some stocks and see what people are doing, because the tech stocks really show a picture. Oh, yeah, look at Apple. Look at Apple. They fell all the way down. Look at them recovering. Wow, that is a nice recovery right there. That is huge. I mean, they didn't surpass this previous peak or anything, but they're on their way, aren't they? They didn't even bother to consolidate down here. What's the best time for this? 12 hours? Look at this candle. for stocks, 7% is huge. Look, do you see a 7% candle anywhere else? Nowhere. There's no 7% candle anywhere. Oh, here on this drop, on this drop. But this is a pump of 7%. That is bullish. That is bullish. That's people selling their gold. That's people selling their commodities and their oil. They're taking profit off of those things, which had increased in price because of the fear, the uncertainty of a possible World War III, right? They're taking their profit because we didn't have World War III, and they're putting it back into these tech stocks because the Fed said, "Hey, you have a little bit longer for cheap money." It doesn't mean that down the road, that the Fed isn't going to get more aggressive about rates, and then we're going to have to deal with this problem all over again, right? It just means that for today, for yesterday and today, they have some money to put into these markets, and of course they're going to swap it out. Why wouldn't they? They're going to swap it out before you and me. And that's why I called it, right? Because I'm watching these things very carefully, and you can call it. You can call it, right? And then when we had more certainty about the sanctions, because that's what I was waiting for on Bitcoin, right? See me drawing these formations. You can see, right? We're just waiting. We're just waiting for certainty about the sanctions. What's the final form going to look like? How hard is the economy going to be hit by the sanctions? Are we going to be able to recover this or not? If the consensus comes out that we're not going to be able to recover it, then we are going to go down again. We are going to go down. But if the consensus is, and by the looks of it, right, you saw the Apple stock. Let's check out, what else do we have here? Tesla? Wow. Yeah. I mean, don't get confused. This chart looks horrible. Right? This is a loser right now, right? This looks really bad, but this is an incredible bounce. And that is huge volume. That is huge volume compared to the volume that came before it. I mean, a lot of us were thinking, Tesla might need to have a huge check back, right? Hasn't done it in a while. But looks like they get to have a little extra time. They get to have a little extra time, but this price will have to be paid eventually. These lines might move up, pricing might move up, but they're gonna have to pay the price eventually. I mean, otherwise inflation's going to just go crazy. It's not all on Tesla, right? It's not all on Apple or all on Tesla. It's just it's just the system. It's just the way that money circulates in the system. Oh yeah, look at the dollar. You see, the dollar spiked because of the Russian what is it called, ruble or whatever they call it, right? It got decimated, right? It just collapsed. And of course it did, right? There's a war. There's a war and Russia's being sanctioned. So of course the Russian dollar is going to collapse and the US dollar spiked to take its place. But we found out there's not going to be like some major war near Russia. There's not going to be, with bigger players than Ukraine. It's going to be contained to Ukraine, and also the sanctions. There's probably going to be ways for the Russians to do business. They can't be cut off completely. So a lot of this was irrational. There's no way to fully contain the Russians. And the Europeans aren't on board with it. Again, like it's the Europeans who were blocking the SWIFT system being taken away from Russians. It's the Europeans who are blocking some of these heavier sanctions. It's not Biden. It's not the US. Actually, we want pretty tough sanctions. But there's compromise. You have to compromise with your partners because they're also beholden to their people, right? Germans have to look out for the German people. They can't just be thinking about Ukraine. And so they're trying to figure out a balance. Trying to figure out a balance. And so the dollar benefited from the uncertainty, but then reality came back in that the Russian dollar still has its power. And of course, the dollar's probably going to continue to be bullish, but maybe that was just a bit too much. And so what happens when the US dollar falls, right? Oh, Bitcoin rises. Why? Because it's cheaper to buy Bitcoin now, right? It's cheaper to buy a Bitcoin if the dollar falls. And so while the dollar was pumping on fears of the Russian dollars being worthless, the US dollar was pumping, Bitcoin was collapsing. But as the US dollar retraces, goes down, then Bitcoin's going to pump, of course. That makes sense. Again, it's not the invasion that does anything, it's the policies. It's the policies, it's the fear, it's the uncertainty being recovered. See, this is just uncertainty. It's being recovered. We didn't add anything to the system. We're just getting back to where we could have been before. And a lot of people are getting rich from it, selling off those fears, selling off the fears that we all had, and then they're buying back into the tech stocks, right? Selling off their gold at a super high price, by gold standards, and getting back into tech, you know, where they can make bigger percentages. Because you made what, 7% on Tesla, and you only made 3% on gold. Why are you going to be in gold when you can be in Tesla? If the Fed's saying you get cheap money for a little bit longer, then you might as well stay with Tesla, right? Might as well stay with Bitcoin a little bit longer. Doesn't mean you won't have to get out later, but you may as well stay with it for a little bit longer, as long as these policies are going to be around, as long as there's no World War III. Let's go to the daily. Take a look at some things. Treasury bonds heading down. S&P still not looking great, but recovering a bit, recovering some levels. This thing looked like it just wanted to fall like crazy. It fell to my levels, but we caught. Look at this, 30% down is what I was projecting as possible. Not, I didn't think it would happen, just as possible. We already went 15% down. Look at this, 34%, 22%, 41%, 39%. So yeah, 30% was really possible. I mean, if not more, right? It could come all the way down to this trend, 44%. Look how much of a ways down. We've already like suffered this much. You could see a huge collapse in risky assets like Bitcoin if that had happened. But that's not happening. We're catching this level, we're catching support, and maybe we can do Maybe we can curve a while longer, and later on, maybe there'll be a deeper correction. Get Nasdaq, same story. These channels I've carved out here. We recovered this bullish channel because look at this. Yeah, that's March 2020, right? That's the free money that enabled us to just pump to heaven, get an extra level, gain an extra level on the world, on the financial system. They were in this level, but thanks to free money, thanks to inflation, thanks to your contribution in extra prices, all these investors were able to get to the next level. They haven't even broken down to the regular level yet, right? You're losing like 80, 90% of off of your altcoins. They're still on the next level, right? I mean, when you have a ton of money in these markets, this is really good, you know? They don't need to gamble with when they have that much money. They can put it into something safe like this. Up only. Up only for sure. But look, it was it was threatened. This was threatened. It was threatened to break down. And look, oh yeah, it caught itself. Look at where it dumped to. I marked it off, but I didn't really realize that it had broken down from this channel. Yeah, it really was in danger of just falling to the next level down. Then they'll have to fraternize with us, the little people. It's a lot of people's retirements and stuff, so again, we make the hard choices, right? The Fed has to make the hard choices. We have our money in the market, we don't have our money in the market. What do we do with our money? Things get scary, do we pull out or do we keep it in case there's a recovery? And then the Fed has to decide who wins and who loses, right? Either inflation or the stock market or and then the sanctions on Russia, the president has to decide who gets hurt. Does he hurt the Russians? And, Americans filling up their tank because the gas prices go crazy, right? You, you can't have everything in life. There are costs. Everything has a cost. And so people criticize for high gas prices, but then they also criticize for not being tougher on Russia. But you can't have both. You can't have cheap gas and be super tough on Russia. You can't have it both ways, right? The harder your sanctions are, the higher the gas prices are going to go. The less harsh you are, the easier it'll be to afford gas. You can't have both. Same thing with these things. Same things with stocks and Bitcoin and inflation. You want high stocks, rapidly expanding profits in stocks, then you have high inflation. You want low inflation, then get prepared for a stock crash, right? Get prepared for Bitcoin to crash. You can't have both. I mean, it's a fine balancing act, but these politicians, they're not good at balancing those things. They're in their own bubble. The Russell 2000, these are the more risky assets. Yeah, look, just breaking all levels. Because risky assets like Bitcoin, they don't recover as easily. This thing still looks pretty shaky, right? That wasn't a higher low. This is a noble attempt. I mean, it did pop up a couple levels support, but it still looks pretty fragile, right? Volatility is getting under control. Still pretty high. This is an ideal zone for volatility. You can see all the way back to 2010. A nice healthy volatility in this area, but our volatility is just crazy. Right? This is Corona. And then we've just been on an extra level of volatility since then. What was this? That was the financial crisis, 2008, housing crisis. Same thing with the Nasdaq volatility. Russell volatility, same thing. Pretty high volatility. Almost those Corona levels, right? But still, we're not getting higher. We do seem to be rounding down a bit. So that's in favor of the market. And then some of these, like the Korean stock market, they were down, but looks like they're catching support. UK was down, catching support. Yeah, the German stocks were getting hammered. Caught support though. So the rest of the market seems to be lifting up, even the European stocks. And the European stocks might get hurt quite a bit because of these sanctions and things. They are taking a sacrifice, just like we can consider gas prices at home are rising. You know, Europeans they're gonna be hit even harder. They're even more integrated with the Russian economy than the US. So, and I know I'm presuming that a lot of, people who follow my channel are Americans. Apologize for that, but yeah, we are kind of an insular country. So sometimes it's hard to correct my language. I worked for 12 years with a Korean company and have a background in international relations, and I still make that mistake. So I apologize to all my various listeners from different parts of the world. I don't mean to lump everyone together. It's just a bad habit that Americans have. Well, some Americans, me, I guess. Look at these altcoins. MTV, Kadena, bullish Kadena. Oh wow, should have caught that move. Yeah, I should have caught that. VRA, nice, nice. This is just one day. 38%. Oh, Luna, 33%. UOS, little resistance there. 30%. These things aren't really breaking trend. These lines that I have are for logarithmic, as well as linear. And so it just have both sets. Sometimes these coins that have pumped a ton, I just don't know if the people trading them are using the linear chart or they're using the log chart or if they're using the linear chart. And since the lines move when you're on a different setting, sometimes I do both lines. So it looks pretty sloppy, but you can see I traded this one all the way up, right? I traded this one since like 36 cents. I've just been trading it. Traded all the way up to 35 bucks, or wherever it went. 20, wasn't it 20? Yeah, like $27. Lovely Kadena. Hopefully it does it again. Hopefully we can have a chance to ride that roller coaster again. Maybe it could be the next Solana, you know? You don't know. I mean, it kind of already was. Avalanche. You see these things, they're still under a downtrend. This isn't really, I mean, kind of, but not really. But this is very bullish. I mean, macro, right? It's macro, it's very bullish. The heck is this? Ah, yeah, that does look a lot clearer on log. Bullishly breaking out of its channel. And then it stayed in. Maybe it wants to retouch the bottom of the channel. Come back up. Or maybe it's just so bullish that I have this marked wrong. Maybe something like this. Yeah, with the next level on top, right? And a possible breakdown level. Maybe. This might make more sense. There's this little node here. I love these diagonals. Some of my friends hate them, but I love them. Just for some reason, for my mind, I see it a lot clearer when I'm using diagonals than when I'm using horizontals. And I use both. If I go over to the BTC chart, I don't just do these type of like fractals. Right? These funny fractals. Here's another one. Let's go to 4 hour. See this? See a W-shaped recovery? You hear about V-shaped recoveries, right? But these W-shaped recoveries, where you see a W in the center, they can have these little fractals that play out. And it might be hard for a lot of people to see it, but art is my hobby, and so I can see these shapes repeating. You see this type of like certain shape? It just repeats from the center of the W. And then you can follow that fractal, and it's always a distortion. But they have similar numbers of moves, and I don't know why that is. I have no idea what's going on, what type of algorithm, what type of bots cause that to happen, but it happens. And then you end up with these components that have very similar features. Look at this: 1 spike, 2 spike, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8, and then some little wing, And then what happens after the wing? A pump. What are we getting right now? A pump. The fractal's playing out. You can see it live, right? I'm recording this, but it's playing out live. So, most people probably don't see the fractal in this, but I've been doing art since I've been a little kid, and so I can just see these fractals just so clearly. And I love to draw them out. I see a pump, and then some consolidation upwards. If we're bullish, it'll go up, right? If we're bearish, maybe it'll go down. Maybe we won't even make a higher high. Maybe we'll just stay under this downward diagonal. But if we're bullish, we'll make a upward diagonal. Show you my crazy diagonals. Get rid of these trend lines. You can see they follow the diagonals, right? Follow the diagonals down. And one thing that you might be able to see is this thick line here and this thick line here. That's heavy resistance. And look, we like basically gripped, we couldn't break through it, couldn't break through it, couldn't break through it, dropped down. Then we landed on this one, used it as support, support, bounced up, hit this one, couldn't break through it, finally broke through it, used it as support, flipped it into support, tried to use it as support, broke down because of the Russia news. See, we should have pumped here. The fractal should have played out this way. I think I was showing you that on a previous episode. I projected that this fractal would play out here, right? That this choppiness would just kind of like curve around, sort of like what we did here, but we would do it here. And that would give us the bullishness to keep going, because we basically, you see this X, like this purple one and this pink one form an X of support, and the support and resistance were flipping, but on diagonals, not horizontals. It's not like I don't use horizontals. I do use horizontals. So don't accuse me of not using them, but I just like diagonals better. For some reason, I see clearer on it. And it offers much of the same picture. And by the way, none of this is as important to me as these EMAs. The EMAs give you a really great picture. You see this just squeezing through the EMAs. This 4-hour play here. And look, as soon as we broke that 50, just popped, starting to hit resistance on this 89. And this is the 200, so that's going to be heavy resistance. Just 200 MA. But if we can break through there, we can pop yet again. Yeah, this could get quite bullish. I mean, if we are able to pop through here. Daily also, these are turning up. Still downward. These are still downward. But this is a nice sign. See what happens when they start squeezing. Get this pop. This style of trading using EMAs was taught to me by Crypto Retta, and I'll always be grateful for that. Even though I fool around with the fractals and all of those things, you know, I'm primarily an EMA trader, and I just play with the other stuff for confluence. But you can tell how I've researched the stocks and the Russia and all these things. You know, I also try to stay informed about the market that I'm trading. And you should also be informed about the coins that you're trading. So this was a really long episode. Just wanted to kind of go over some things. Just wanted to talk. It might be a little bit of anxiety because of the market being so up and down, that volatility being at such an, such an extreme. And hearing all the sad stories from my friends in Ukraine and how their lives are just being torn upside down. Sometimes you just look at technical stuff and It makes you feel a little bit less sad about those things. Kind of get into your hobby. That's what I love about crypto. It's kind of like a hobby that you can make money off of, right? But yeah, my heart's pretty heavy today, and my thoughts are fully with the people of Ukraine. And just you hope for the best, but you know the worst is yet to come. So the most you can do is stand by them. And if you have any way to support people, who might be suffering from a war, please do. Please consider it. There might be some charities popping up, or there might be other wars with refugees, or just some type of charity in general. If you've made money in this market, give back a little bit. These moments, they really help you put into things into context. And yeah, let's do our best to be better people in this world. We all make mistakes, but we can all do a little bit better also. So I'm going to sign off. That was your alpha for the day. Stay safe and happy trading.